Starting with gold, which snaps at 4-day losses and holds above $1,660 per ounce ahead of the Fed announcement in the markets today. The physical buying, though, is also a supportive factor for the precious metals, not just in Asia. But if you look at the US ETF buying, that also has been on the higher side for both gold and silver prices going forward. To crude, where the NYMEX crude prices are trading at a 4.5-month highs on positive data from US and China. Though this market also is awaiting the Fed policy statement today. On your screens, nearly 0.5% of a gain coming in for the NYMEX crude and the Brent crude prices as well. To chat more on the crude prices, let's go across to Azleen Ahmed. She's editor crude oil market at Argus Media and joins us from Singapore. Azleen, hi. How would you read the Saudi Arabia and many other OPEC producers also cutting shipment even as we see the prices gaining?
Okay, well, OPEC production in December was actually the lowest level in about 14 months, and that was mainly because of Saudi Arabia reducing production. I mean, we estimated that Saudi production in December was about 9.03 million barrels per day, and that's their lowest production since May 2011. Basically, Saudi Arabia has said that it's responding to sluggish demand and expectations of higher US production. And they are seeing demand slowing down, mainly because of the challenges in the Eurozone economic growth, and also just continued concerns about the US fiscal debt. But actually demand may have already reached a turning point, because we're not seeing US demand shrinking as much as it was in early 2012, and the IEA has also revised higher its 2013 demand growth compared to forecasts it made 2 months ago.
Azleen, also, what's your view on the crude prices? They have gained for 7 straight weeks. This is an 8th straight week where you have seen the gains coming in. Where do you see the NYMEX crude prices heading now?
Right now, Brent has indeed broken away and risen from its recently well-defined ranges, and a lot of it is in response to the tightening of the supply-demand balances after Saudi Arabia cut production in November and in December. So the lower OPEC production is expected to continue at least into February, so we could see Brent prices holding up. For NYMEX, in the very, very short term, I think that a lot of it will depend on what's happening with the Seaway pipeline, because that takes crude out of Cushing, where the WTI delivery point, to the Gulf Coast refiners. And recently, just in the 3rd week of January, there was some reduced flows in the pipeline, which put pressure on WTI prices. But that's going to be just temporary, so you know it should normalize, and WTI should recover slightly towards we think the end of January, early February.
So while we are talking about the bullishness in prices, Azleen, the economic data from the US, Germany and even China has been on the stronger side in the recent sessions. So do you see that sustaining for a longer term and supporting the prices as we go ahead?
Yeah, I mean, we did see that preliminary China PMI numbers were stronger in January, and German PMI did rise. But the composite PMI for France actually fell in December compared to November. So I think that the Eurozone will still be a bit of a worry, at least in the first half of the year. And there are still, I mean, the OECD has said that the Eurozone is entering this phase, a treacherous phase, where the austerity measures could alienate voters and unnerve governments, and potentially prompt governments to maybe resume their old spending habits. So I think that it's a little bit too early to see the direction that Eurozone is taking. For China, we do see that oil demand growth should pick up this year compared to where it was last year, but the days of double-digit oil demand growth for China are probably over, at least for this year and next year.
All right, Azleen, your point is well taken. So while we are looking at recovery in demand, but a massive gain up in the prices is not expected. Thank you so much for joining us with your view. Let's also get in then Vibhu Ratandhara. He's AVP Commodity Research Bonanza, and also joining us is Vijay Bambani, who's author and CEO BSPLindia.com. Vibhu, let's start with you, and what's your sense coming in for crude prices? 97 and counting on NYMEX crude, and 5200 is holding as far as MCX goes.
Definitely, quite a supportive prices since the what we had discussed, quite a supportive data from the US as well as from the China side, of course from the Germany also. Technically also looking quite strong towards somewhere around 100 or $101 in the WTI, or I can say somewhere around 53.25 to 54.25 in the domestic market. Support is 51.20. It's a 51.20 is a very strong support level. As long as it is hold above the same level, I think quite a near-term target is somewhere around 53.25 to 54.25.
Vijay, how would you look at the natural gas prices now? Because there's a bit of a support coming in for that one. The heating oil prices also gained nearly 2% yesterday. So would you say as a whole sector, this place really seems to be buzzing now?
Well, Manisha, there is a little bit of a support coming in natural gas, and I'm kind of betting that this might be the beginning of a bottoming out process, at least temporarily. And whenever the markets attempt to make a bottom, they are invariably abortive attempts, and 2 or 3 times a breakout is attempted, and before finally the price could basically rally higher. So let's assume that this is one such attempt, probably one of the first few ones. I would initiate a buy in the February futures in natural gas at 173.5, which is a marginal decline from where it's trading at right now. I would hold it with the stop loss at 171, and I would expect to get out of this trade profitably at 178.5.
Vibhu, how would you be looking at the precious metal space? Because ahead of the Fed meeting announcement, there is some support coming in for this sector as well.
Definitely, everyone is awaiting Fed announcement. Apart from the Fed announcement, Q4 US GDP data is due at 7 o'clock today evening. Apart from this, Friday we have a non-farm payroll data, which is quite important for the next stimulus stage for the Fed also. So this quite volatile for the precious metals prices. I think technically we can say still the downtrend is looking on the board in the domestic market, or else in the international market also. In the MCX, I can say somewhere around 29,950 is looking quite a near-term target, as long as it's sold below 30,500 resistance level.
Vijay, how would you look at the base metal prices ahead of the Fed meeting, and of course the positive data that we have seen come out of China, US, even Europe seems to be stabilizing now?
Manisha, after a while, base metals are looking like they're likely to perk up a little. Aluminium is heading towards the 110 level. Copper is trading above 440. Lead and zinc, which I advocated a buy on, have reached their primary profit-taking targets. And lead is now attempting to scale the 130 mark and trade above that, which if it does, it could probably go up to 132 or 132.5 or so. Zinc, I think, trading comfortably above 112.5 is headed towards 114. So there are early indications that the base metals pack, provided the follow-up data is conducive to such a move, will basically perk up a little from here, and I would not rule out 2.5–3% advance in most of these counters, if not more.
Vibhu, what's your sense? Which metal are you picking up for the trading day today?
Definitely agree with Mr. Vijay. I think lead and zinc looking quite bullish for the short term, or I can say for the day or two. I am expecting lead towards somewhere around 131.5 to towards 134 level in the short term, and also for the zinc, we can expect somewhere around 115 or 116 also in the domestic market.
All right. So even as the global markets are headed higher and rupee has appreciated nearly 1%, you are looking at more than 1% of gains coming in for the base metal sector as well, clearly buzzing on the higher side.